Tesla's recent unveiling of its highly anticipated robotaxi at the We Robot event was supposed to be a pivotal moment for the company. This was Tesla's chance to showcase its future of autonomous transportation, with grand expectations surrounding the event. However, the market's reaction was less than favorable, as evidenced by the 8.8% drop in Tesla's stock after the announcement. It's clear that despite the high hopes, the event didn't meet the market's expectations, leaving some investors uncertain about the company's immediate future. The backdrop to this is that Tesla has been facing increasing competition in the electric vehicle (EV) market, as global EV growth has started to slow, especially in the face of impressive and reasonably priced new entrants from China. Tesla has found itself grappling with a shrinking share of the market. This was especially true in the first 2 quarters of the year, where Tesla's sales were significantly impacted by the slowdown. Although the company rebounded in the third quarter, the stock has been volatile, losing over half of its value from July of the previous year to April of this year, when it bottomed out at $138. Tesla has long relied on Elon Musk's charisma and bold promises to maintain investor optimism, but after another disappointing quarter, Musk pivoted to focusing on the company's self-driving ambitions. This led to the robotaxi event, which was supposed to be a turning point, offering a glimpse into the company's future and the next big leap in autonomous technology. Musk has previously stated that FSD, full self-driving, is key to Tesla's long-term story. However, despite the fanfare, the event fell short of providing the necessary details to inspire confidence. Musk revealed several new pieces of hardware during the event, including the sleek Cybercab, a 2-seater coupe-like vehicle that eliminates steering wheels and pedals. The Cybercab, he claims, will be priced under $30,000 to allow small business owners to buy entire fleets. Additionally, a new vehicle, the RoboVan, was introduced. The van can carry up to 20 passengers and transport goods, designed with a futuristic Art Deco feel. But it was the Tesla bot, Optimus, that caught most of the attention. This humanoid robot was shown dancing, serving drinks, and interacting with people. Musk stated that these robots would be available at scale for prices between $20,000 to $30,000 and could perform a wide variety of tasks, from teaching and babysitting to walking dogs and mowing lawns. While the hardware revealed was visually impressive, the real questions remained unanswered. Tesla didn't provide enough detail about the financial aspects of these ambitious projects. There was little clarity on the economics behind the Cybercab and RoboVan, especially with regards to their operating costs and revenue potential. Musk mentioned that the Cybercab could operate at an average cost of 20 cents per mile, with customers paying 30 to 40 cents per mile. The RoboVan, according to Musk, could have an even lower operating cost, 5 to 10 cents per mile. But without hard data or evidence to back these claims, it's hard to take these figures at face value. Another significant issue is the lack of specificity on the rollout of these self-driving vehicles. Musk mentioned that FSD would be available in Texas and California next year, but he didn't provide a clear timeline or roadmap for the broader rollout. The lack of a clear and detailed strategy for when and how robotaxis would be deployed was a key disappointment for investors and analysts alike. This is especially concerning given the competition Tesla faces from companies like Waymo, which already has a fleet of unsupervised autonomous vehicles operating in cities like San Francisco, Phoenix, LA, and Austin. The market's reaction to Tesla's event was telling. While Tesla's stock dropped by almost 9% following the event, companies like Uber, which faces direct competition from robotaxis, saw their stock rise nearly 11%. This suggests that investors are skeptical about the viability of Tesla's robotaxi plans in the near future. Without the self-driving component, Tesla risks being relegated back to being an automaker competing in a decelerating EV market. It's important to acknowledge that Tesla has invested heavily in artificial intelligence and the neural networks required for autonomous driving. Tesla's self-driving technology is already one of the most advanced in the world, and while the event may not have provided enough specific details, the company still holds a significant lead in this area. For long-term investors, Tesla's commitment to innovation and the scale it could achieve with FSD and robotaxis is still very much a potential growth story, albeit one that requires patience and confidence. Morgan Stanley analyst Adam Jonas, a longtime Tesla bull, expressed disappointment with the event's lack of detail. Jonas has been one of Tesla's biggest advocates, but he found the presentation lacking in substance, particularly in terms of the timeline for FSD and the financial models for the new vehicles. The market's hesitation to buy into the vision Musk presented could be seen as a reflection of the difficulty in scaling autonomous technology, especially when local governments and regulators are involved. The potential for accidents and the ensuing political backlash is a real concern that needs to be addressed before robotaxis can become a viable business model. Despite these challenges, it's essential to consider the long-term vision of Tesla. Elon Musk has always been a master of transforming ambitious ideas into reality, and his track record suggests that even if the timeline for full autonomy and robotaxis is extended, Tesla is still well-positioned to lead in the future of transportation. Investors who are willing to bet on Musk's ability to navigate regulatory hurdles and technological challenges may still see substantial gains in the coming years. However, it's also important to acknowledge that Tesla is no longer the only player in the game. Companies like Waymo and others are making significant strides in autonomous driving, and their progress could be a real threat to Tesla's dominance. Tesla needs to prove that its autonomous technology is not only safe and reliable, but also scalable and economically viable. Tesla's growth potential is undeniable, but as the recent stock movement suggests, it's crucial to temper expectations. The robotaxi event may have been a disappointment in the short term, but the broader vision for Tesla's future remains intact. For those invested in Tesla, the key will be to monitor how the company executes on its plans and how quickly it can bring autonomous vehicles to market. With so much uncertainty in the air, it's clear that this is a long-term play, and investors will need to be patient as the technology matures. Ultimately, while Tesla's stock may be down today, the company's potential in the fields of autonomous driving, AI, and robotics is still significant. The event may not have delivered all the answers, but it didn't change the fact that Tesla is leading the way in these revolutionary technologies. Whether or not it can turn those innovations into a profitable business model remains to be seen, but for those with a long-term outlook, Tesla could still be one of the most promising companies in the world. In conclusion, while the robotaxi event may have fallen short of expectations, Tesla's journey is far from over. The company's future growth depends on the successful rollout of FSD and the robotaxi fleet, as well as the development of its AI and robotics initiatives. Tesla remains a leader in innovation, but it will need to address the challenges of scaling these technologies and proving their economic viability. For investors, now might be the time to adopt a wait-and-see approach while keeping an eye on how these developments unfold in the years to come.